Welcome back, traders. We are going to be looking at your favorite stocks today. And do me a favor before we get too deep into today's episode. Do me two favors. Number one, put in the chat your favorite stock this week. And number two, put in the chat the stock that stole your lunch money. I'm sorry, it happens. I know it, but you got to be defensive as a trader. You and I both know that. We're going to cover those stocks. We're going to cover what's in our portfolio. We're going to cover what we're seeing out there in the market. But most of all, I am excited about, because this is my favorite time of the day, favorite time of the week, is to backtest your stocks. So do me a favor, start spamming that chat box as hard as you can, smashing the like button with the fury of 1,000 Hulks, and let's do this thing.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Uhl.
Hey there, traders. My name is Christopher Uhl. I hail from 10MinuteStockTrader.com. That is my website where I basically help people take the guesswork out of trading in only 10 minutes a day. And the way that I came up with 10MinuteStockTrader.com was I had to learn how to trade on an iPad underneath my desk. And I tell you what, when you're pulling your iPad out every day with the data plan, trying to convince your boss that you're working while you're trading, that can be tough. And because of that, I only had about 10 minutes a day to talk to him. So if that sounds interesting to you, if that's a situation you're in as well, you know what? I would highly suggest that you come and check out our podcast. It's called the How to Trade Stocks and Options podcast. You can access it as easy as it comes by just going into your YouTube search bar where you're at right now, type in 10-minute stock trader, and you'll see my smiling face looking right back at you. So with that out of the way, let's take a look at what in the world is going on out there. Right now, the S&P 500, I think, is starting to weaken, I guess is the best word to say, right? We're flirting with new all-time highs, but we're not having that that same power that we had, all the way through October to really push up to these highs. Now, with that said, you can look at the underlying nature of this, and I'll talk about this in our 10-minute trading room today. If you look at the MMFI, this is the percent of stocks above their 50-day moving average. And I was explaining it. Where's my calculator? Basically, it's 58% of the S&P 500 is above its 50-day moving average. So 500 times 0.58, that get 0.58, hang on, 500 times 0.58, 290 stocks. So of the S&P 500, 290 participants are above their 50-day moving average. 290 participants out there are bullish. That's what we want to see. Anytime it's above the 50 line, which is an easy line to keep, that's where I am looking to go long. Next, today, unfortunately, in our portfolio was a defensive day. One of our key indicators that we use is FinClub.ai. And today, all of their picks failed, which is always a red flag. But on top of that, they had a yellow light. And this works in like a green light, yellow light, red light system. And I'm a huge advocate for this FinClub.ai and their artificial intelligence data. So much so that if it's not a green light, I don't even look at trading long. So with that being said, I think we may start seeing the internals, which is this section right here. We may start to be seeing the internals break down a little bit. I always like to preface this. I'm not a perma bull, a perma bear, a perma anything other than a perma person who watches the market and changes what I'm doing based on what's actually happening out there. So if you haven't already spammed the chat, like these good people have, Carl has, Money Mitch has, Body took my money. Body also got Scarjo Rabbit. Mara, I heard some stuff happened in Mara. We can take a look at that. The S&P, right? I can understand. I mean, if you're out buying long calls and then you hit the wall right here at, what number is that? 470? That hurts. SPI was one of the best winners. We can take a look at SPI, Mr. Mitch. Richard, how are you, man? Earl, thank you for that. Hey, Boston Beer. I know that guy right there. I know exactly who this guy is. ZNev, I can take a look at that. All right, so let's do this. Let's take a look at what's in our portfolio, which isn't much, but I do actually have some really great case studies this week about how to manage your trades. Okay, so right now we have one position on. Not exciting, but I don't like to trade exciting, right? I've seen the YouTube videos, and so have you, where maybe it's Squid Game coin, right? Where you've got this guy, he's got the music playing in the background. He's got tattoos on his face. He's like, nah, Squid Game coin. It's like $1 billion. And then wait a sec. It's zero. Oh my gosh. I don't play those games. No thanks. I like to go with very fungible assets. I don't trade the NFTs because liquidity is one of the biggest things that should ever matter to you. If you can't get in a trade and you can't get out of a trade, then there is no point in making that trade. All right. So with that being said, PG, good old boring Procter and Gamble. That's our one trade we got on right now. Reason being, I'll show you here. So we're trading this inside of our trading room, and we're following this on the 10-day exponential moving average. And I was explaining to them how I trade this. And basically, as long as it's moving up, we're going to participate. We'll participate as long as it continues to move up. Now, we will keep our risk really, really tight on this trade because you should keep your risk tight in every trade. If the close of today is lower than the close of yesterday, your bull trend may be starting to break down. So if that happens and the backtested trend line, in this case is my 10-day, which is the blue line, if that's below my entry point, then I'll go ahead and take it off. If it closes today lower than yesterday's close. But if my trend line is above my entry point, I'm going to give it a little bit more room. That means it's working for me. That means I'm already profitable. I'm slightly profitable on this trade, but if it had closed below 147.01, I would have got out. It closed at 147.11. It's got 10 cents to move. Keeping your risk tight is so critically important to being a trader because if you don't, that's the fastest way to blow up your account. So next, let's take a look at XLP. This is when we traded and when we got out of. So this was on the 5-day exponential moving average. Now, oh man, it's not showing it anymore. So there's a little glitch in TrendSpider where it will take this projected move and plot it out onto the chart and keep it out there forever. But unfortunately, they've made an upgrade and it's glitched out. Now I can't plot it forward like I used to. But with that said, this was following inside of its backtest nicely. And then it started to break down. And when it breaks down, when it breaks through that 5-day exponential moving average, that's when I need to get out. And so we got out. We took a small loss. How much was that? Like 60 cents? And you live on, right? You take your 60-cent loss and you move on. FE. We were following the 5-day on this one. Okay. This one thankfully still has the expected move built out into it. Now here is one where the 5-day, it closed below that today. And you just got to take your lumps, right? So how much did we lose? 20 cents, maybe 22 cents. It's not about the win rate. If someone's trying to sell you something where it's the win rate is 90%, 85%, whatever percent, they're taking extraordinary risk because this is normal. I've talked to literally billion-dollar hedge fund managers. I've talked to US investing champions. I've talked to the greatest traders in the world on my podcast. Shameless plug. They constantly, without a doubt, every time say that their win rates are like 40 to 60%. 60% on the high end. And the reason they do that is because they cut their losers. They don't let these run against them. Even if the backtest is showing you that it should be going out this way, which, you know what? We all hope that everything we buy goes up. And it doesn't. You need to move on and you need to do it fast. So if you found that useful, if this is something that you also do, smash the like button. If it's not something you do and you need to start doing it, smash the like button. So the one last trade that I wanted to look at, it's not even a trade. It is something that I found really interesting. before we get into the audience request. So in the chat box, smash it down, right? Tell me your favorite stock. Tell me the ones that took your money. I need to know these things. Let me look at QCOM. This is the exact reason why you trend trade. All right. I'm gonna do you a solid. I'm gonna clean this up real quick. I'm gonna take off everything that's not the 10-day moving average, because that's generally where I start. We're gonna do a strategy test, and we're gonna say if it's above the 10-day, enter, which would be like right here. If it's below the 10-day, exit. That's the only criteria for this. This is that one simple line that everyone talks about in their YouTube ads, right? Hit run. The asset performance shows 70%. So that means using this strategy, cumulatively over the last 1,000 candles, you would have made 70%. That's a huge return. And you can see the entry and exit points along this way, right? There are times where you're going to get chopped up. But every once in a while, you're going to catch that rocket ship. And this is exactly how I trade, exactly how I trade with the members of the 10-minute trading room, and exactly how I want you to trade, because this works. I'm not going to say it's going to work every time, but talking to the greatest traders ever, you're going to find they say the exact same thing. You want to find a trend, and you want to ride that trend for as long as that trend goes. The trend is your friend until it bends, as they say. So if you had gotten into QCOM at 129, it's all the way up at, oh, geez, I got to move my chart here. 183, and has no sign of looking to get out. Now, granted, if you're following this, you do have a lot of open profit risk. You've got, how much is that? $17 in open profit risk. Maybe you start peeling off some. Maybe you enjoy these winners and take them off some. But in all reality, this could go on forever. And while we do back test, and you can see the back tested results on here, when it blows these out, that's a huge, huge winner. And you want to ride these guys for as long as you can. So that was a kind of a case study that's going on right now. QCOM is just like rocket shipping. I don't know why. It doesn't really matter why. As long as you trade it the way that it's going, and don't you dare try and catch that top. Don't even think about it. Don't try a contrarian trade, because I know you want to. I know you do. And I'm talking to me from like a couple of years ago trying to figure all this out. Don't you dare try and catch that top, because it ain't going to work. And you're going to blow up your shit. And you're going to be real pissed. Pardon my French. Sorry. Been studying that Duolingo. If you found that useful, do me a favor, smash like. But let's do this. Let's go to your audience requests. Booyah. I am excited about this. Oh, sorry, Mom. I know she listens. She called me out last week. Hope your mom listens to what you do too. All right, let's start at the top. Carl, let's backtest these guys. Now, like I said, we're going to do the one simple strategy, which is one line crossing over, and keep it super simple for you. We're going to look at just entering when it crosses above the 10-day moving average and exiting when it crosses below the 10-day moving average. Now, with that said, you can use this on anything. You can use it on the 8. You could use it on the 37. You could use it on whatever works for you. But for me, I like the 10-day because I'm taking advantage of these strong moves like you see in QCOM, but I'm also keeping my risk in check. Because if I'm running on the 50-day and it has to come down $50, I'm giving up a hell of a lot of open profits that I don't want to do. All right, so let's look at Carl's what is this? IONQ. Holy moly. This is what we're talking about. So this one shows 139% cumulative return versus 136% total return for the stock. Now I'm looking at this backtest here and I'm thinking that it IPO'd, which it did. So basically you're going to see exactly on the backtest what you would be seeing for the stock in almost every situation here. Now, because it has IPO'd, we don't have a lot of historical data to move back from. But, of course, this has done great. And, of course, it's had a huge, huge breakout from its IPO base. And where it goes, nobody knows. But you can monitor your risk, Right now, the risk to the 10-day is $9. That's quite a big. What is that percent? Real quick, hang on. That's a 30%. Ooh, that makes me nervous. Carl, I hope you're in this, and I hope you're long, and I hope you're making money on it. But the open profits down to the trailing stop on here makes me super, super nervous. In your shoes, if it were me, I might tighten that up. I might run on the 5, something along those lines, because obviously this is very volatile, and I don't want you to have to give up 30% of your open profits just to find an exit point. Carl, nice one on there. Mr. Money Mitch, body. Ooh, yikes. Okay, let me do this real quick. I like to add a few indicators to help me see what's going on for this. First one I like to add is the Keltner channel. Now, the Keltner channel gives me an idea of what is overbought and oversold. And it works similar to a Bollinger Band, if you've used those before. But this is taking the 20-day exponential moving average, the black line, and that's adding 2 average true ranges to that 20-day moving average point. So by doing so, you can find out where it's moving faster than the average true range of the stock. Now, with that said, let's add the 5-day and the 50 and the 200. Let me find where that 200's at. There it is. Oh, this has only been trading for just over a couple hundred days right now. That's why that line's so short. So here's your rules of thumb that you need to know. Number one, the easiest way to determine a bull or bear market is the 200-day moving average. The second way to look at a bullish or bearish market is the 50-day moving average. That's why I always include these. Now, I'm hoping my man Mitch was not going long on body. But at the same time, if he was, I hope he was keeping his risk in check, because that's really the most important thing of everything, is keeping your risk in check. So with that said, yeah, body got smashed. Let's look at its 10-day moving average, which was out of it November 5th. And this has a negative return. So if you followed the 10-day moving average strategy, you can expect to lose your money. That's not a great place to be. But this does give you some data, some empirical evidence, some reasoning and justification behind how you're going to trade. Richard, I see you also got body. Yeah, you got body checked by body, right? If you are trading this, running the back test is going to give you great information if you are a very systematic trader like myself. If you're a discretionary trader and you're just thinking, hey, you know what? This has been down. There's a chance it might bounce. I will let you catch every falling knife you want to. No offense, Mitch.
No worries. This just goes back to another lesson of sticking to what works, right, guys? When you start dipping outside of your game, you just might find some pain.
Yeah, for sure.
And this is one of those that definitely when I actually added to this trade on that gap down day right before it, and I gave myself I said the 486 on the out. If we would have got out there, yeah, it would have been a controlled loss. But I was out live on Money Mitch, and it was a costly show, Chris.
Dude, that's the second time you told me that. If you're going to trade live, you need to.
Benjamin.
You gotta follow your trading plan and show everybody else how it's done.
Hey,
right?
It's what it's all about, guys. And that's why backtesting is also so important, because backtesting could have really maybe saved me here and not even got me in the investment.
Yeah, exactly. If you knew that the strategy that you follow was going to have a negative return, why would you even get in it? Right. So, yeah. Mitch, thanks for that input on there, man. Appreciate you. It looks like a few people in our chat also had that same issue. Now, let's take a look at Mara. I don't know what the news was. I'm not a huge news follower, but I do know that it got smacked this week. What was it? People are saying it's overvalued. Marathon plummets. Oh, SEC subpoenas. That's what it was. Yeah. Oof. So here's an interesting thing. Generally, most of the time. Okay, what day was this? I'm gonna teach you a lesson about trend following real quick. So that was 2 days ago. Okay. The people who knew this was the The people who knew this was going to happen, they got out here. They told you it was about to happen. So if you were paying attention and you saw this move here, you would have thought, well, that ain't right. And maybe even you were following the 5-day exponential moving average and you would have got out right there. Now, I'm not saying that you can predict the future, but if you can read what's going on and pay attention, sometimes things like this will actually key off and let you know that, hey, something ain't right, right? When we've got, I didn't realize that was a 20% move in one day, top to bottom. That would have shook me out. I'm telling you right now. So yeah, that SEC news, somebody knew about. Somebody made their moves here. Kind of like how Elon's been selling his shares, right? It's not Elon who's moving this market. It's everybody else who knew what Elon was doing and moved along with him. Yeah. So with that said, Carl, I'm sorry that happened, man. But you know what? We all learn from it. Oh, you know what? I owe you a back test. Give me 2 seconds here. That's the reason you're here. You're not here to listen to me talk. You're here to see the data. I understand. I am just the conduit to get that data to you. Now, Mara has a 390% cumulative return over the last 1,000 candles, which is a monster return. If you followed this strategy, you even beat the stock, which you can't control the movement of the stock. You can only control your strategy. And yeah, like over double. So yeah, nice one on there, but now it's not the time to be trading Mara. Let's look at BABA. Now, this is a Chinese stock, and right now, Chinese stocks are super out of favor. So it's well below its 200-day moving average. So super bearish to start with. It just today, well, no, it's been flirting with its 50-day. Okay. So maybe it's gaining a little bit of steam here. You can see the back test went out ahead on it anyway, but it is not performing to that back test. When you see this happen, that's your key right there. Even if you don't follow a moving average, right? If you have access to this kind of data and you can plot this out on your charts, I mean, this is honestly, I'll teach you a quick lesson here. This is how I started trading back tests. Before I actually did it on a specific moving average that I'd follow, I would just put a line below this moving average, or not moving average, this back tested result. And I'll say, all right, if it blows out this back tested result, it's a failure on the back test. And so I'll get out. So with that said, Alibaba's returns cumulatively negative 18%. So Earl, this is not somebody I'm excited about. Unless you're shorting it, then there's an opportunity. Boston Beer. If this guy's last name looks familiar, it's because I know him. Full disclosure, this is my dad. He's being super, super cool and supporting me, and I appreciate that, Dad. Also, he bought me my first stock, which is hanging up there on the wall on a paper stock certificate for the Boston Beer Company. And that's when it was $50 a share. And obviously, I'm not going to sell it because it has a lot of sentimental value to me. But jeepers creepers, you know, Boston Beer was up at $1,300 when we had all the kinds of what is the word I'm thinking of? Hard seltzers out there, which I actually like Truly. That's their hard seltzer. But yeah, it's been murdered. However, this is the power of a back test. Even though the stock has been, you know, Hulk smashed, down from a high of around 1330, we're at 486.43 right now. Even though it's been Hulk smashed, you follow this back test, you still have a positive cumulative result, and you miss that entire move. I'm just saying, that's why we do it. So thanks, Dad. Appreciate you. All right, moving on. Richard. ZENB. Okay, so ZENB. Right now, obviously, it's below its 50-day. That's problematic to me. This is brand new. We've only got a few days. July 26th was its July 20th was about when it came on, when it IPO'd. Yeah, so for me, I don't trade IPOs. because you don't know where it's going to go, right? But in the future, right? Remember back to Facebook. I remember when Facebook IPO 2012. It was like $40-ish a share, and now it's, $300-ish a share, give or take. And you don't know where it's going to go, right? You got to let that thing find its way. You got to let the market decide, hey, do we like this stock, or are we going to send it? Are we going to send it straight to hell, like Oatly, Oatly, Otly, right? So this also is an IPO that died. So I mean, you got to give it time to work. So let's go back. ZENV. Honestly, I don't know if there's even enough occurrences there have been 4 occurrences of this. One of them was a winner. The other 4 were losers. But what's critical and important, and I'll never stop talking about it, is managing those losers. Because even though there were only 4 positions traded here, 5 positions traded, 4 of them were losers. One of them was the winner, because that one was greater than all of the 4 combined. We have a positive backtest. Like I said earlier, if somebody's scheming you, telling you need 90% win rates, they're not telling the truth. They're not keeping their risk in check. If you can do a 20% win rate and still come out positive, that's exactly 100% how the game is played. And if you found that useful, like the thing just popped up, smash the like button. Next. Hang on. Money Mitch sent me something saying 5-minute warning. Daggum Mitch, if we start on time, I'll be better off, son. I'm just playing. I appreciate the opportunity to come on and talk to you guys. Let's do this. I have one more I'm going to do. I'm sorry we ran out of time. I'm totally picking at random. Prague? Hey, this looks nice. All right, so Prague, 42% cumulative return versus negative 61% on the stock. Now, remember, as we go through this, if you see that the stock is negative, you're basically just picking 1,000 candles ago to now. How has it performed? We have no control over this. How has our strategy performed? That's the difference here. How has our strategy performed? How's the stock performed? The stock has been not great, negative 61%. Your strategy, if you're following the 10-day, was phenomenal, 42%. That's literally 100 percentage points difference between what your strategy would have got you and what you would have got just buying the stock. So let's do this. I am about to do our final thoughts. Hey, if you are enjoying today's episode, I got 2 things I need you to do right now. Smash the like smash it till your screen breaks. And then after your screen's broken and you still haven't quite cut your thumb on your glass screen, type in 10-Minute Stock Trader on your YouTube search bar. Come subscribe to the 10-Minute Stock Trader How to Trade Stocks and Options podcast. We publish 3 episodes a week. This week, I'm so excited. The market wizard, Mr. Serenity, Tom Basso, is going to be on the show. And I got to tell you, the ability to network with these kind of people is amazing. And I want you to come and be a part of this so you can experience and learn from them as well. But let's do this. Life and trading is 10% what happens to you and 90% how you react to it. Well, isn't that the daggum truth? That's how my grandmother would have said. Isn't that the daggum truth? Stock trading is 10% what happens to you and 90% how you handle it. In every situation, 10% of what the market is doing, I'm just going to click around for a minute, right? You can go to any stock and keep that thought in mind, right? 10% what happens in the stock and 90% what happens to you. What would you do? What would you do here? You plan that out, you get ready, and you execute. As long as you can execute that plan, that 90%, hopefully it'll just roll off your back. Can't hurt you if you trade right. So listen, thank you so much for letting me come on the Benzinga live stream. Thank you so much for everybody in the chat dropping in their favorite and least favorite stocks. I really appreciate you taking the time to tune in and listen. Make sure you go subscribe to the 10-Minute Stock Trader YouTube channel. I hope to see you there, and I hope to see you on Friday when we have our market wizard Tom Basso interview come out. And really, I want you to know I really appreciate being part of your day. I'll see you next time.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks,